Hello traders, my name is Logan with Funding Talent, and in today's video, we're going to be doing NFP week, also the week of June 28th. So in this video, what we're going to do is our weekly market forecast, going over the best fundamental drivers for you to be aware of and maybe stay away from, and also the best technical setups for you to keep your eye on in this upcoming week. So without any further delay, let's get right into the video. Hello traders, so here we are back to our slideshow as we always are. To start off the week, we're going to be looking at our fundamental drivers, high impact news. And for this week, what you can see is we actually have nothing essentially until Thursday when we have OPEC and JMMC meetings all day, 10 a.m. USD news and 3 p.m. Great British Pound news. Besides that, on Friday, we have NFP. So my advice to you guys, if you are active trading or scalping, is to tighten up your stop losses and be a little bit extra careful around Thursday and Friday of this upcoming week. But the rest of the week should be absolutely fine. So personal spending in the US was unchanged in May of 2021, missing market expectations of a 0.4% increase. This essentially just means that the economy had forecasted for people to spend more money on commercial goods and services, which would therefore pump up the economy, but surprisingly, it seems they did not spend that money. An increase in spending for services was most likely offset by a decline in spending for goods. So that just means that even if people were spending more money, they were most likely spending more money on services rather than goods, which would in turn have the same effect, but it would be more ideal, obviously, if they were spending more money on goods and services. So besides that, core personal consumption expenditure prices, that's a mouthful, in the US, which exclude volatile food and energy costs, essentially anything when you see numbers coming out when it says core in the front of it, that means that it's excluding food and energy. So core CPI, core PCE numbers, both of those exclude food and energy. So those numbers increased by 3.4% year over year in May of 2021 and is the highest rate since 1992, bringing it well above the Fed's 2% target rate, which they are aiming to achieve. So that's essentially just the same numbers that we were just referring to, actually. And what this means for our market sentiment is that we are going to continue with our risk on market sentiment. For our newer viewers, as always, our risk on market sentiment means that expectations are higher for further economic growth, meaning that the economy will do well. This will therefore translate into currency prices and indexes worldwide. So indexes will appreciate, and for currencies that we can expect to appreciate, that would be the New Zealand dollar, the Canadian dollar, the Australian dollar, the euro, and the pound. So here we are on our charts, as we always do after our slideshow, and we forecasted gold after this retracement to continue moving, but essentially for this entire week, it's just been completely stagnant. So what we can expect is possibly just a continuation of this consolidation here, and then our move higher. But we are expecting gold to continue to move higher in the medium to long term. With silver, after we got this decline out of our channel from previous that we were acknowledging, we did expect prices to move lower, especially after we broke out of this secondary channel. But I do expect prices to possibly move sideways for the time being, or potentially continue moving lower. So right here is the only other support we're looking at before I can confidently say that prices are moving lower. But until we break that point, I will expect prices to maybe consolidate and then maybe come back down, bounce up a little bit, or we can just break through and continue our bearish momentum. Besides that, could we make another run for this high? We absolutely could, but I do think medium to long term, silver prices will be moving lower a little bit. So keep your eye out for that. So here's a little play that I'm looking to take on Monday, possibly Tuesday, depending on when we can get more confluences for this setup. But this is going to be a shorter time frame trade with a lower stop loss. Because while we can capitalize on those active day trades in the first couple of days in the week because there's no news events, that would be ideal rather than waiting for Thursday and Friday when there's going to be more volatility, more unexpected price movements when those news events come out. So on Monday, Tuesday, Wednesday, I'm going to be looking to long CAD CHF, potentially up to this high right here, which we formed prior, around 75 cents. So that's what I'm going to be looking for. But I'm going to be combining not just this analysis, but also going down to a lower time frame and finding more confluences, as I was stating, to get a more high probability trading setup. Because right now, there's not enough confluences to allow me to confidently say the prices will absolutely go higher, right? So all we can do is move the probabilities in our favor. So that is what we will do via your own trading strategy or via price action, which Jessica teaches in the course. Or any other trading strategy, really. What we're looking for is just multiple confluences, which will point us in the same direction and validate our bias, as long as we are open to other biases and open to our bias being changed if price then reacts in against it, right? So if it's invalidated, that's fine. We move on to the next trade. So for BTC, I do think we found a low actually here at 28,660, and I do think we will start moving higher now. Now this corrective wave is pretty steep, right? It's pretty impulsive with the amount of momentum, bearish momentum in this wave, but I am expecting possibly a move back down to the support fractal, which we've tested time and time again, and then a move higher. I do think that we will end up moving higher off Bitcoin, and that's my bias for right now, until something invalidates that, of course. So for USD JPY, I'm looking for a long opportunity. As you can see, we were looking at shorts on the daily time frame, but we actually invalidated that. Nothing confirmed that entry, so you wouldn't have gotten in. And now I'm looking for longs to the high of this channel before moving lower. So we broke above this resistance fractal, which we tested multiple times, and I'm expecting, as you can see, we got a confirmation of that again, once again today on Friday, and I'm expecting to move higher. So that's what I'm going to be looking for on USD JPY longs. Great British Pound Dollar. As you can see, this was just a recap of our trade from the other week. This is working out phenomenally. And as you can see, I think this could be due for more downside. As you see, I'm about to show you GBP CAD, which we also have pegged for short opportunities. So I'm going to be looking for more shorts on Pound Dollar. Kiwi CAD, NZD CAD, we gave this to you guys last week, and as you can see, price was moving very nicely up, and I am expecting prices to continue this bullish momentum. Not too much to be said, but if you want to get into technical Elliott wave counts, this would technically look like we completed our corrective wave, and then this was wave 1. We're coming down to complete wave 2 before we move up for wave 3, and then make our 5th wave high, possibly at this other high at 88.4. So my bias is long on Kiwi CAD. So here's what I was talking about on Pound CAD, which I'm looking for short opportunities because we just broke out of this wedge recently, bouncing off of this support turned resistance fractal. As you can see, it was support acting until right here when we broke out. Then once the support was broken, it was then converted into resistance. At this point, it is then acting as resistance, confirmed here multiple times, 1, 2, 3, 4, 5. And now we are moving lower. Just got a confirmation of this breakout, so I'm looking for shorts in this upcoming week on Pound CAD. So traders, that was the market forecast for the week of June 28th again. So if you liked this and pulled some valuable insight out of it, we ask that you please subscribe and hit that like button below, and also be sure to subscribe to all of our other social media platforms if you're not already doing so, because we're releasing new content across all of those various platforms every single day, and new videos just like this on YouTube. So on behalf of everyone at Funding Talent, happy trading.